Jim Hildebrandt, thank you so much for joining us today at SuperReturn International. We've heard this morning one of the industry titans, David Rubenstein, pinpointing emerging markets as a place that's a good asset class to look at. What would you say about that?
I think the emerging markets have been a great asset class for quite a long time and continue to be. There have been some ups and downs, but I think that's inevitable both in emerging and developed markets. And actually some of the markets that we talk about as emerging have actually developed quite a bit. So really the classification isn't completely accurate.
You would describe them as post-emerging markets now?
Well, if you take something like China, parts of China are very developed. So if you went to Shanghai or Beijing, that's not too different from many major cities in the world, while Western China is still significantly less developed.
You mentioned China there. Growth has slowed, but you're still saying this is a very good place to invest, even though a lot of Chinese money is coming out.
China remains an excellent opportunity with lots of growth. I think back to this conference a few years ago where people said growth in China was slowing down quite a bit, and people seem to say that every year. In fact, China growth still looks like 6% plus. If you look at the size of the economy now in dollar or yuan terms, that's still a very, very large part of global growth. Actually, China and India together still account for probably close to half of the expected growth over the next few years.
Do you think the geopolitical climate affects emerging markets more though, because people see them as less stable parts of the world, if you like?
Yeah, that's a good question. I actually think that in many ways emerging markets have more stable governments. If I look at Western markets now, whether it's Brexit or what's going on in the US presidential race, I look at Japan, China and India as places that are thinking forward over what are they trying to do over the next 5 years, 10 years to structurally change and advance their economies. So in many ways, I think they're more stable.
Do you think they have the structures and governance in place as well, though, in places like India that is a huge economy?
Do you think the governance is that good in Britain or other parts of the Western world? I think every country has its own governance structure. They're all grappling with their own democratic issues or how they manage themselves. I guess we're more focused on how well is the economy structured for us to advance our businesses and grow businesses. I would say for China, Japan, India, we feel like the environments are pretty good. Actually, also in Korea and Australia where we're active.
So where do you see the key opportunities lying then? What are your predictors, if you like, for the next 12 months, and where should people be looking for those successes?
12 months is a strange time frame. We tend to think more over 2 or 3 or 5 years. I think you should be looking at putting your money in markets and companies over a longer period of time to really achieve results. It's very hard to pick cycles and leave high and enter low. I see retail investors tend to leave low and enter high is more typical. So I would say pick your markets carefully, work with good advisors and companies and stay in longer, and you're going to have much better results. The great thing about emerging markets is you have high growth. And so, across Asia we might expect 3 or 4 or 5% growth, and that includes 6 or 7% growth from China and India. This overall region is growing much more rapidly than Europe or the Americas.
And are there particular sectors within those areas, within those localities that you would look at?
I think that what's exciting right now is that we're moving from products to services. If you think of Western economies doing that over the last 20 or 30 years, China is certainly doing that now. And that's into business services, financial services, education, healthcare. These are also all very interesting sectors. And we're seeing consumer growth that's roughly double GDP growth. And much of that money is going not just into products, but also into consumer services.
So good returns to be had if you just sort of stick on in there and keep your eye on what's happening and look at emerging markets as a more stable option going forward.
Yes, definitely. I think the sort of natural panic flight at times of anxiety from emerging markets is a great buying opportunity, not just for us in private equity, but also for retail and other institutional investors.
Thank you so much for joining us. Thanks for your thoughts.